Keith Lerner, how do you see it? Set the table for us ahead of tomorrow morning.
Sure. Great to be with you on this Thursday. You know, the consensus is looking for around, 240,000, wage growth above 4%. So I think if really what you want to see as far as the sweet spot is somewhere around 200,000 and a little bit light on the wage side. But I will say, after we get through this number, we have a long holiday and then we have CPI. People will forget about this employment report by the time next week rolls in. And I think the bigger picture is, the risk reward in our view at 4,100 is just not that favorable. When you're looking at a market that's trading at an 18 multiple, in our view, you have a lot of good news baked in with a little margin of error.
I know, but I feel like you didn't think the risk reward was that great either at 38 or 39, and here we are at 41.
Actually, when we were on with you in the beginning of March, we actually said after the pullback that the risk reward had become slightly more improved. You actually gave me a hard time about that. And now that we're back to that 41 to 4,200 level, we think it's less favorable. And by the way, last time we actually made an asset allocation change in our portfolios, it was around these levels. We didn't think it was time to press things at 38 or 3,900, but we are back up here. And like I said, I mean, I think a lot of the debate is the Fed going to pivot? Is this going to allow them? And our point of view is, the Fed has raised rates 475 basis points. Whether they do another quarter or not is less meaningful. In our view, as we move into the second half, we will see a more meaningful move down in the economy. And then, Scott, just one more point. When we look at the second half, there's a disconnect. And I think something's going to have to give in that in the second half, industry analysts are expecting earnings for the S&P to rebound to a new high, while the consensus economists are expecting numbers to come down. So we think that actually those earning numbers will have to come down, which makes the market even more expensive than it looks today.
Real quick, before I let you run, did things change this week in terms of what the data seemed to be showing, not only about the economy, but the labor market itself?
I think it shows that it's slowing down from a very strong level. So I do show that you're starting to see that. The question that the market's debating is how quickly does it go to more of a negative side? We think that happens more into the second half, but at least it's starting to trend that way.
Keith, I appreciate it very much. Good weekend to you.